Good morning, everyone. As Andy said, I'm Andy Thomis. I'm the Chief Executive at Cohort plc. And Simon and I would like to welcome you to this morning's webinar. And we'll be taking you through our final results for the financial year ending in April 2023. I'm going to start by giving you the highlights of the results we're announcing today. Simon is going to provide more detail then, including a divisional breakdown, and I'll come back and give you some comments about the demand drivers and about our future prospects. The big picture is we've seen a very strong performance, record operating profit, record revenue, and a record closing order book. Revenue and profit both up very strongly. Revenue grew by a third to 182 million. Adjusted operating profit and adjusted earnings per share both grew strongly to just over 19 million and 36 pence per share, respectively. And those are all new record numbers. And it was also a very good period for new orders. Order intake of 220 million pounds was significantly more than the revenue we recognised. And so the total order book had grown to nearly 330 million pounds at the year end. And that meant that 80% of our consensus forecast revenue for the current year was already on order at the end of April. And that strong order winning run has continued since then. And at the end of June, the order book had grown to 360 million pounds, which gave us 90% cover for the year. And finally, our cash flow was also strong, bringing us to an end of year cash position that was much better than we'd expected, with net funds of 15.6 million pounds. And against that background, the board is very pleased to be recommending a final dividend of 13.4 pence per share, and that represents an increase of 10% for the full year. Now, before we get into the detail, I wanted to let you know about some changes that we've made to the way that we present our results this year. So we've grouped our 6 businesses into 2 divisions, reflecting the 2 main areas that we operate in. And we think that that will make for clearer and simpler reporting while still providing the detail that you want and need. So our Communications and Intelligence division includes EID, MASS and MCL. You'll recall that EID is our Portuguese naval and land communications business. MASS provides specialist technical services to customers in the intelligence and electronic warfare worlds. And MCL provides both communications and intelligence equipment for customers in the UK government primarily. Our Sensors and Effectors division comprises Chess, ELAC Sonar and SEA. Now, Chess specialises in integrated optical and radar sensors for land and naval users. ELAC Sonar provides complete sonar systems for surface ships and submarines. And SEA provides its own special purpose sonar sensors, as well as effectors, including torpedo launchers and decoy launchers for surface ships. The 3 charts on the right show the recent revenue, operating profit and order book contributions of the 2 divisions. You'll see that both achieved similar revenue last year, with Sensors and Effectors slightly ahead. But Communications and Intelligence made much the larger contribution to the group's profitability. And that's primarily down to MASS, which has the highest operating margin of our businesses. Now, conversely, Sensors and Effectors makes the largest contribution to the group order book. And SEA, in particular, has been building its order book very strongly. And that provides long-term stability for the group. And continuing the growth trajectory that we've seen for that division in recent years will help us push up margins closer to those of Communications and Intelligence. One thing I should emphasise is that this new way of reporting does not mean that we've changed the way that we manage the group. So Simon and I continue to have direct and close relationships with all the operating company managing directors. And they have the same high degree of autonomy within our light touch but rigorous framework of financial and governance controls. So if we turn to the next slide, Simon will give a more detailed breakdown of the performance of our divisions, but this slide shows the main factors that are behind the group's performance improvement. In Sensors and Effectors, one major factor was a return to a solid profit at Chess after a disappointing net loss last year. Now, Chess still has some way to go to achieve its potential, but we're increasingly confident that it's on the right track. And alongside that, we saw steady progress at ELAC and SEA. SEA in particular made a big contribution to the group's order intake. In communications and intelligence, we saw a remarkably strong performance at MCL, a business that has less than 50 employees, delivered the largest annual revenue, all our businesses, and the second largest profit contribution after MASS. And that was a result of increased UK defence spending on certain types of equipment, as well as growth in the long-standing hearing protection product line. MASS made its usual significant contribution, though slightly lower than last year's. EID's performance, on the other hand, was rather disappointing, and that was a result of delays to domestic orders and some supply chain issues. But that didn't detract from what was overall a very positive picture for the group as a whole. So let me hand over to Simon now to take you through those results in a little more detail. Simon, over to you.
Thank you, Andy, and good morning to everybody. As Andy's already said, I'd like to reiterate that we had a record revenue and trading profit performance for the group. One thing I'd bring to your attention, the weaker gross margin percentage is a combination primarily of mix change with a lower relative contribution from MASS within the communications and intelligence division. But it also reflects a weaker margin on some specific projects, in particular on the Italian sonar project within ELAC, which sits within the sensors and effectors, where we are trading at a lower level while that project progresses through its development phase. And within the same division at Chess, where we were able to sell some older product, that did have the benefit of quite a cash boost to the business. However, we do expect that gross margin to improve in the coming year, in 23-24, returning to closer to historical levels that we see there in 22. And that will come from a change in mix with MASS improving a bit, but also improved performances both at Chess and EID. Move to the next slide, please, Andy. Within communications and intelligence, we saw a strong operating performance from this division, with revenue and trading profit up 26% and 21% respectively. The improvement has come from a very strong MCL performance driven by UK MOD demand during the year, especially for communication equipment, hearing protection and drones. Unfortunately, or sadly, EID had another disappointing year of continued delay to large naval orders from Portugal. These now are expected to be secured in the current financial year, with the procurement process in Portugal already underway. Once secured, we do expect EID's performance to recover, albeit slowly at first. Order cover for this division now stands at around 75% for the coming year as at the end of June. This is typically lower than the sensors and effectors division, with the short-term nature of some of the work that MASS does, and especially MCL. For the coming year, with a recovery at EID, improvement at MASS, we expect MCL to revert to more historical levels, and overall we expect this division to trade relatively flatly for the coming year. Thank you. Next slide. Sensors and effectors, again, a strong operating performance from this division, with revenue and trading profit up 39% and 24% respectively. The improvement was from continued growth in ELAC and SCA and an improved performance at Chess. We've also closed out legacy issues at Chess, in part explaining the weaker net margin of this division. We've also acquired land in Kiel for a new facility, with building work expected to start in the next quarter. This new facility will replace ELAC's current facility, which is due to be torn down and used for future facilities by the University of Kiel. We've ensured that the timing of the building completion is ready for delivery of the first Italian sonar production systems in 2025 from this new facility. The order cover for this division, as at the end of June, now stands at 95%, which is typical for this division, where much of the work is on long-term naval programs. We expect this division to grow in the coming year and to drive the overall group performance in the coming financial year. Next slide, Andy, please. Turning to the net funds. As Andy's already touched on, this was a strong year for group funds, increasing from 11 million to 15.6 million. This was despite a net working capital outflow of nearly 7 million. That came across 4 of our businesses within both divisions. We saw stock build at EID with some deliveries slipping into May, and a similar issue at MCL. Many of those deliveries have now been delivered in the first quarter of this year. At ELAC, we continue to see a build on the Italian program, and at SCA, we also saw builds for naval programs and for traffic camera systems, both of which are on order. We've also invested over 5 million in CapEx, almost double our usual run rate. This was mostly in Germany, with the land purchase for the new facility, and also acquiring equipment for the major Italian sonar project. We do expect the group's CapEx to be over 10 million in each of the next 2 financial years, returning to a more normal run rate in 25-26 of around 3 to 4 million per annum. I am guiding net funds to reduce in the current year to around 8 million before growing again in the next 2 years after that. Overall, I would sum up a record trading year, strong funding position to enable investment in technology and targeted acquisitions. I'd like to thank you all, and I'll hand back to Andy.
Thank you very much, Simon. In this final section, I'm going to talk about the outlook. I'll start with the broad market position. Then I'll talk about some of the investments we're making in new products and technology to maximize our opportunities. And then I'll show you how our existing order book runs off over the coming years, and I'll round up with a summary at the end. So let's start with the main forces that affect demand. The global picture has 2 main driving forces, the continuing conflicts in Ukraine and the influence of growing Chinese assertiveness from the Indian Ocean all the way to Australasia. So in Europe, this is primarily, but not exclusively, a land-based challenge. Russia's foreign policy has grown more assertive over many years, but the transition to armed aggression in 2022 was a step change. Now, I don't expect that Russia will win in Ukraine, but a long-term armed standoff is likely in the longer term, and its revitalized defense industry and reconstituted armed forces will pose a standing threat to its neighbors in the West. So Russia's European neighbors will need to adapt to that new reality. In Asia, Chinese assertiveness has not yet manifested itself the same way, but the naked threat is there. And of course, Taiwan is at risk, but aggressive behavior and maritime claims in the South China Sea are having a major regional impact on defense postures and on equipment spending. Above all, Chinese behavior has driven the creation of the new tripartite AUKUS alliance. And that naturally leads on to the domestic picture, as AUKUS is one of the factors having a major effect on UK defence spending and industry. The Defence Command Paper, released yesterday, announced initiatives to make UK defence, and I quote, a science and technology superpower, and to develop a new and more strategic relationship with industry. And that approach complements the refreshed integrated review earlier this year that confirmed the need to invest in responding to challenges from both Russia and China. In Germany, we're starting to see the impact of the step change in defence spending that's been promised, and our German business is already supplying specialist hydroacoustic equipment for new German surface ships and submarines. And in Portugal, the long list of domestic opportunities for EID is finally gathering some momentum, with bids being invited now for several major programs and a new military procurement law approved by the Portuguese Parliament. In our export markets, well, most NATO countries have pledged to increase defence spending since February last year, and we've seen a direct impact in some of our markets, with new opportunities emerging and existing orders increased in scope and scale. Further east, we see strong demand in the Asia-Pacific region. Australia has continued to commit to strong growth in defence spending under the Albanese government. Japan remains committed to a doubling of its national security spending as a share of GDP by 2027. And it's also joining the Anglo-Italian Next Generation Combat Aircraft project. Elsewhere in the region, spending has also grown strongly, notably in the Philippines and in Taiwan. And NATO and Asia-Pacific are the regions that we supply most, although I should say we're also active in South America. So overall, the demand picture for Cohort's products and services is positive. And against that encouraging background, we are maintaining our spend on technology development to meet the evolving needs of our customers. And many of those projects are quite sensitive, but I wanted to share some of the examples that I can with you. One of the key lessons of the Ukraine conflict is the importance of battlefield awareness, awareness of friendly forces, hostile forces, objectives, and threats. And EID has invested in a dismounted soldier system integrator that provides power, communications, and an accurate battlefield picture to every infantryman. Now, it's a very advanced system that's going to match those provided by leading multinational primes at a much lower cost, and it's already now in service with the Portuguese army. Chess has developed an artificial intelligence-based technology to track small and elusive targets in challenging environments. I'm thinking particularly, of course, of drones. And I'm not sure if you can see the drone that's behind the tree in that photograph on the bottom left of the slide, but I can assure you that Chess's technology certainly can. And that capability is being combined with other weapon technologies to create genuinely effective counter-drone systems. Looking to Asia Pacific, one of the greatest security challenges is driven by the large and growing submarine fleets of China and North Korea. And SEA is developing technology to allow non-expert users to detect submarines and to build and share an accurate picture of the undersea battle space, known as the multi-environment display. And another key technology in that domain is underwater communications. And that's going to become even more important as unmanned underwater vehicles become a vital part of naval inventories. ELAC is developing new technology that will enable those vessels to be controlled and to share data without surfacing, which will make them vulnerable, and without that communication being intercepted. And that's the underwater spread spectrum acoustic communication. And finally, and no less importantly, we maintain our strategy of seeking and investing in value-adding acquisitions. We're very selective. We won't acquire a business unless we know it will add value and growth to the group in the long term. But we have an experienced team and we have no shortage of opportunities to review. So I've talked in broad terms about markets and capabilities. The next slide shows the tangible results of the demand picture that I've described. So at nearly £330 million, Cohort's year-end order book is the strongest that we've ever announced. It includes a very substantial element that will directly feed into revenue this year and next. But it also includes over £100 million of order cover for 2025-26 and beyond, guaranteeing a solid flow of revenue for a decade or more. And as I mentioned earlier, since the year end, the order book has continued to grow. It reached £360 million at the end of June, and that gave us 90% of revenue cover for the year. The larger part of our order book, as you can see from the chart, now sits with the Sensors and Effectors division. SEA makes a very strong contribution to this number, and it's received a further strong boost to its order book since the year end. It also has opportunities to win some new large long-term orders this year. And ELAC and Chess also add significantly to the total. In communications and intelligence, MCL tends to operate naturally on quite a short-term order book, and so its contribution to the total is relatively modest. MASS's order book is substantial, but only increases significantly in years when its large long-term service contracts are renewed. EID's order book reduced in 2022-23, but looking forward, it sees some very attractive opportunities with its domestic, naval and military customers. And with the new Portuguese military procurement law now approved by Parliament, we're more optimistic that these will be converted into firm contracts in the year ahead. Now, in this slide, you can see the first column of the chart that I've just shown in numbers, together with a comparison against the position as it was at the same time last year. So you've got a growth there in total order book from £291 million to £329 million. And that's a 13% increase, which is a strong indicator of the potential for future growth. The two shaded columns show the revenue that's already on order for the year ahead compared to the same position in 2022. And in communications and intelligence, we can see that the underpinning is broadly similar to last year, a little higher, but not much. MCL's ability to win and deliver new business in year will have a big impact on the division's actual performance. But the big change is in sensors and effectors, where the underpinning for the year has risen from £69 million to almost £84 million, and that's an increase of over 20%. And that positions us very well in the division for further growth this year. Now that brings me almost to the end of the presentation. So here's a summary of the main points that I wanted to make. It's been a record year in terms of performance. We're not resting on our laurels. Indeed, we're already on to the next year, but we're very pleased to have grown the size and strength of the group. Maybe even more importantly, we've achieved a record order book and we see an excellent pipeline of further opportunities ahead. And as I mentioned, that order book had increased to £360 million by the end of June. The markets we're operating in are growing, and we expect to see those higher levels of spending maintained in the longer term. We're investing in the products and capabilities that our customers will need as they look to keep themselves safe in what is a more challenging global security environment. If we can, we'll accelerate our growth through targeted acquisitions of additional businesses. Our immediate expectation is that we'll continue to grow in the year ahead. I've tried to explain what's behind that view in this presentation. And beyond next year, based on our order book and the opportunities we can see, we expect that growth to accelerate. As a result of our performance and our prospects, the board has felt confident to increase the dividend by 10%. We've grown the dividend every year since our IPO in 2006. Overall, it's been a positive year. As I say, unfortunately, there's no time for us to sit back and admire it because we're already on to the next one. So, in closing, I wanted to take the opportunity to thank our management teams and our employees for their continued hard work. And let me leave you with this snapshot of how we see ourselves developing in future years. We have made considerable progress towards this vision from our earliest days on the market back in 2006. The strategy continues to be to generate growth both organically and through acquisitions while paying a dividend that reflects our successful financial performance. We believe this offers the best long-term returns for investors while creating high-value employment and enhancing the security of the UK and its allies. Thank you all very much for your attention. If you have any questions, Simon and I will endeavour to answer them in the remaining time we have. Thank you.
Simon, possibly one for you first. Could you give a little more background to the relocation process and the investment of CapEx that you're making with regards to Elaxona in Germany, in terms of the total costs that you foresee the projects amassing, how many years it will take before you in your financial calculations?
Yeah, well, okay, thank you, Andy. We estimate that the overall cost, and we've allowed some contingency in this, obviously, will be including the land around about 20 million euros. And we expect the build to be completed towards the back end of next year, 2024 calendar year, maybe early 25, allowing for any slippage, with obviously the business up and running in the new facility certainly in the first half of 25, if not earlier. And it's all really around aligning with the Italian sonar project program, which, as said, the first deliveries are late 25. They would already be under build in the current facility, but obviously what we don't want to be doing is trying to move at the point where we're trying to deliver as well. So that drives the timing. As I said, the overall project cost is estimated around, at the moment, 20 million euros. There's contingency in there. Okay.
Good. Yeah, that makes a very sensible investment. Possibly one for you, Andy. We have a question about the Defence Command paper refresh that you referred to, and given your considerable experience, how do you assess the realistic chances of significantly more business accruing to Cohort from the MOD, or is this a high profile media exercise by the current government?
Yes, well, I don't know if the person who's asked the question has read the command paper themselves. It's written in a special language, which requires a sort of long study of the Kremlinology of the Ministry of Defence to be able to interpret. But I think putting that aside, the fact is we've seen a substantial increase in business from the UK MOD in the past year. Part of that has been driven by the European conflict, and part of that has been driven by increasing investment in UK defence. And I do expect that to continue. I do expect defence spending as a proportion of GDP in the UK to continue to rise as well. 2.5% has been promised by the current government. I would be pretty surprised if that was changed in a significant way by an incoming Labour government, if that is what we get at the next election. I certainly expect to see that increased expenditure sustained into the current year. One is always right to be sceptical about some of these claims from government, but the fact is we have seen that sort of genuinely expressed in behaviour over the last year, and I do expect to see that continue. The security environment has changed, and the government really does have to respond to that.
Yes, I think you've actually cunningly addressed a question I hadn't even asked you yet, which is regarding the possible, if not probable, change of government. And I think, as you say, the national need is not something that any government can ignore, and that doesn't apply to only this country as well.
Yeah, I think the comment I would make on that is simply that all of the good things that we and indeed any incoming government would want for the nation in terms of all of those important government requirements, education, health, infrastructure, a good underpinning for the economy, all of those depend first on national security. And that's something we tend to forget in quiet and peaceful times, but there is a very real and imminent challenge to national security at the moment, as witnessed in Ukraine, and we need to make sure we can deal with that.
Yeah, while we're talking about the UK, we have a question in terms of your, and you do describe yourself as a technology company. So in terms of opportunities, might there be scope to invest at a relatively early stage in defence or product related startups that are going to be below the radar level of the MOD itself?
I certainly don't rule that out. I mean, our approach to date has been, when we've been doing acquisitions, to invest in relatively mature businesses that have real product that they're selling with real competitive advantage and that's being used in an effective way. That said, within our businesses, we've been perfectly prepared to invest in new and emerging products. A very good example of that is the crate sense system. That's crate with a K, as in the snake, as opposed to a wooden box. And that is a submarine detection system, which based on our thin line towed array sonar, which is especially suitable for use by the kind of small vessels that are used very extensively in and around the South China Sea by the ASEAN countries. And that's now going into service for the first time with a nation in that region as a very effective means, a very cost-effective means of being able to detect submarines and narrow the options available to the many submarines operating in that region and creating a significant threat and worry to those nations. So plenty of other examples, but I gave one or two in the presentation. And in the right circumstances, yes, we might be prepared to invest in a startup, but we've tended to invest more within our businesses than externally for that sort of purpose.
Okay, yeah, sensible. Simon, perhaps one for you. In context of MCL, and you're guiding after a fantastic period of performance, that growth rate cannot continue in perpetuity. The question is from an attendee: is that the subject to the scale of the market that MCL is operating? Is it small and finite, or have they reached a market share position where it's unrealistic to see much further growth in that business?
Okay, well, you've got MCL is our smallest business in terms of number of people. It employs less than 50 people. It actually achieved the highest revenue of our 6 businesses in the year just gone, which is unusual, incredibly unusual for it. It also operates on quite a short time frame between order and delivery. It typically has the smallest order book of our businesses and normally only has a visibility of about 3 to 6 months. So in a way, it reflects the activity that we saw in the year just finished of the MOD, rather than any particular niche that it operates in. I mean, it actually operates across quite a number of wider niches and wider markets within MOD. So I don't see it being a market constraint on MCL, more just where the MOD is spending money at any particular time, and particularly when it's in its sort of within the year spend. So, I mean, we certainly, I'd love to see MCL do another year like it's just done, but I just realistically don't think it will with the order book. I mean, it actually went into 22, 23 with probably one of the higher order books it's had for a while, and then had a very active year. This year, it's entering with a slightly weaker order book. We are still seeing activity from the MOD, obviously, but whether they'll be at the levels we've just seen, which is a record level for MCL, at the moment, I don't think so. So we're sort of guiding it back to nearer its historical levels. But MCL is an unpredictable business at this stage in the year and could easily perform more strongly.
Thank you. Right, now, a fairly broad question here, given the breadth of your own group, but could you update on competition and if you've seen any change in the landscape? Is it a case that smaller, nimble, IP-driven businesses like yourselves are well set to benefit from this focus on technology and the UK's new alliance, et cetera, or is it a case that the bigger groups have got the ear of governments and are capturing some of the new spend that is occurring?
I think our operating strategy is very much focused on innovation, speed of response, and not being burdened down by a large overhead cost. And that means that we can often compete well on capability and on price. That puts us in a very favourable position in many cases. So, for example, some of the larger prime contractors who have capabilities that are similar to ours in many respects still use ours when they're looking for export customers in preference to their own internal capabilities, because we are able to do more for less. So that's our fundamental competitive strategy. That has served us well. I think there are times when the sheer sort of breadth of capabilities of the large primes and their ability to sort of line all of those up and provide a full solution make it difficult for us to compete. But nevertheless, we have a very attractive offering for many customers, and that is demonstrated in the rate of growth of our order book. I mean, in terms of more internationally, I think we do see an evolving competitive picture as certain nations look to build up their own defence industries, and in some cases, again, with pretty competitive offerings in terms of technology and price. So I would highlight South Korea and Turkey as countries where that's happening. They've had some success in that. But I think our position in the UK, with the backing of the UK government and our other domestic customers, who have high international reputations, helps us against that converging competition. And again, we've continued to do well in the markets where we're seeing those competitors. So that's our thrust, and I think it's an approach that's still got quite a bit of mileage.
Okay, good answer. And sticking with the technology theme, we have a question about evolving technology. Does Gen AI and the constantly updating LLMs impact your product roadmaps and cyber threats that need to be addressed?
Yeah, interesting questions. AI is going to be a very important technology, certainly for advanced nations in the future. It brings the possibility of augmenting the decision-making capabilities and the ability of our commanders to be able to respond very rapidly to changing circumstances, more rapidly than our opponents can do so. As well as many other benefits, particularly in reducing the need for manpower. Because compared to our opponents, access to very large numbers of manpower. Well, just look at what's happening in Ukraine with Russia sort of bringing in released prisoners and so on to augment its armed forces. These are not options that are open to us as democracies. So it's going to be a very important technology. We're already using it. Good example is in the ability to identify particular targets in Chess's equipment. So whereas it's quite easy to sort of spot and track a target using Chess's optical trackers, being able to determine whether it is in fact a UAV, a drone, or a bird, or a very distant aeroplane, is extremely important, and AI gives us that capability. I suppose one general comment I'd make on this is that people should be very wary of the sort of claims which are really science fiction about AI becoming sentient and taking over the world. No, that's not really a very likely outcome, I would say. And we're also not yet in the kind of position where AI is making decisions that might result in terrible mistakes on the battlefield, very destructive mistakes on the battlefield. A time will come, I think, when AI is more actively involved in those decisions, but we're not there yet. As far as cyber threats are concerned, yeah, that's something that is, I think, always very important to be wary of. I think past comments about cyber warfare have been somewhat overblown. I think it is something where, if people behave in a careful and rational way and take good advice, then it's something that can be protected against. And indeed, our business MAS provides that kind of protection to customers both in government and in the private sector. So I think there's certainly a risk associated with cyber warfare and indeed cyber criminality, so ransomware and so on. I think the answer is just take the necessary measures. And that will reduce the risk very significantly.
Great, thank you. Now we've got a question about peripherally about your reorganization of the subsidiaries into two divisions. And the question is this going to help the transfer of knowledge and client relationships and allow divisions to cross-sell more effectively? And following on from that, how is the cross-selling initiative coming along at the moment? It's something you talked about the last time you appeared after results.
Yeah. So we're doing a lot to enhance relationships between the divisions, which were already very strong, between the businesses, which were already very strong. As I think I may have mentioned, we run quarterly meetings of all of the managing directors, where each presents on all of those areas where there's potential for cooperation, we look to build on that. We have various initiatives around the group to build networks, so cross group work on things like business development, where we have a regular conference, on things like HR as well, where we need to share best practice, information technology, where we need to share best practice. And those initiatives are really bearing fruit. So two of our businesses, Chess and SEA, are working very closely together on a capability to defend naval ships, which they are put together certainly the leading capability in the UK, if not internationally, given their two respective strengths. So that's a good example of what we're doing elsewhere. We're looking, for example, to offer secure underwater communications from our German business into Portugal through our Portuguese business. So this is the sort of thing that's happening all the time. What I would say is that the divisionalization of reporting isn't what's contributing towards that. It's all of those other things that I talked about, and the divisionalized reporting doesn't actually reflect the way that we manage our businesses at all. So there's no barrier, for example, that exists between the two divisions in a way that doesn't exist within the divisions. That's not changing.
Great. I think we've just got a couple more. Simon, perhaps a quick one with you, with apologies from the sender because he missed your section. Could you just quickly summarize the balance sheet in terms of how much debt you have and what that means in terms of headroom should acquisitions be on the radar soon? And then we will talk about acquisitions after that.
Okay. Well, obviously, actually, we have net funds at the year end of 15.6. Our gross debt is, and I mean, from this, I exclude IFRS 16, which I do not regard as debt. It's a ludicrous piece of accounting. I also don't include our bonds in this, although they are part of our covenant test, which are our trading bonds. But our gross true cash debt is around about 26 million. That leaves us with, of our existing facility, around 9 to 10 million on top of our 40 million of cash. We also have an accordion, effectively an option to increase our facility with our banks by 15 million to take the overall gross facility up to 50. So you could basically say that our firepower is significant. Obviously, we need to take into account our working capital demands. But I would, debt alone, I've got firepower of around 24 to 25 million. And on top of that, it's what cash I decide to use. All I would add is that we have always, and I've been in defence for over 25 years now, I am very prudent when it comes to cash forecasting. Defence companies are generally, the large contracts, working capital demands can vary quite a bit from year to year. And you can see the swings sometimes in ours. So we are always extremely careful of cash and where we expose ourselves to overall debt positions. But no, we have got reasonably good firepower for, I would say very good firepower actually, for acquisitions.
Excellent. And that does lead very neatly into the final question that's come in. Quite a lot of talk of acquisitions in your presentation, and you have a good track record of making them successfully, but there hasn't been a meaningful one for a few years now. So the question, which I won't hold you to, Andy, is would you expect to be making a deal in the current financial year, all things being equal?
Well, I can't say that is the answer, but what I can say is that, as always, we're tracking a number of opportunities. I think the improving overall demand picture has encouraged a number of businesses to think about what their future is, whether they are able to exploit this opportunity sufficiently well as independent businesses, whether they need a new strategic partner, and as a result, things keep popping up in my inbox and coming across my desk. But I make no apology for being pretty selective about these. There are many opportunities out there, but we're really looking for things that will really add value to us as a business, growth opportunities, and can be done as a good transaction. No acquisition is so good that you can't mess it up by paying too much. And that is obviously a very important principle that we operate with as well. Although we are very good at finding mechanisms to bridge differences in assessments of value between buyer and seller as well. So it's definitely on our radar, but no promises.
No promises, but a guarantee that Simon won't let you pay too much. Right. Well, on that note, I shall say thank you to our audience and for their attention and some very interesting questions. Thank you very much, Andy and Simon, for making the time. And we wish you all the best for a relaxing summer and lots and lots of work in the rest of the financial year. So thank you again on behalf of all the attendees.
Thank you, Andy.
Yes, thank you.